Turnaround Tuesday, Warriors. How's everyone doing today? Let's have a good day. A couple of Turnaround Tuesday potential candidates that I see would be the Dixie right here at the 88.6 level. Comes in at 48. I don't think we got there. Missed it by a pip last night. Yeah, the high's 46. Anyway, in this general area, this is make it or break it and acceleration through here to get the weekly breakout. I just think that there could be one last little jog down, and everyone thinks it's a layup. And when everyone thinks this is easy, it's an easy call, I become jaded and skeptical. Because I'll tell you, once in a while it is, but that's the exception, not the rule, as far as it being easy and something that's for sure. Anyway, that's the vibe I'm getting out there. I think the euro's about 16 or 15 on the DSI. The NASDAQ is in the 90s. Potential turnaround Tuesday here, a little bit higher. We'll have a little 3 drive. NASDAQ has actually been underperforming the rest of the indexes, as you can see, from this break that we had last week. The S&Ps have taken out that high. See that? The Dow has been the leader. The generals are leading the charge. And there's an old Wall Street expression that when the generals lead the charge and the troops don't follow, the generals get slaughtered. So keep an eye on that. I was premature trying to top pick crude yesterday. Been waiting for the one more test of this line. What we have going now is a throwover. Okay, so throwovers, how do you trade them? And this might be a turnaround Tuesday candidate, but the way you trade a throwover is you wait for it to get back inside the channel. That's about 61-ish for it to be back inside the channel. Speaking of channels, we have a great guest that's his bailiwick. It's Barack at Trading Channels for a return interview today. And we also have Grega today. So, definitely looking forward to talking to Grega about his Elliott Wave views going forward. I think Grega last week talked 62 crude. So 62 on the button. Great call by Grega there, but doesn't surprise me. Makes a lot of great calls. And the yen got through the 61.8 yesterday, and so far it looks like it's doing nothing wrong, especially if the dollar is going to be strong and risk on too. But when I look at the S&Ps on a daily, you can see we have 1, we have 2, we have 3. A lot of people down here were saying that it might even be more bearish if we headed up towards the 29.90 level. Yesterday's guess at 28.85 or so. So a lot of people say this is now a layup, new highs in the S&Ps. This one, I could believe because they're so unbelievable. I mean, rarely see this type of low V bottom and then continued acceleration. But if you look at the daily, we're not confirming up here. So be careful with longs. And if you like to hear the ice crack, this could be a decent shorting opportunity on a turnaround Tuesday. And here's the euro. So the euro not too far away from new lows of the move. For the move, that'd be 1176. I guess the question is, do they go stop hunting before we get a rebound? If we're going to take out that 97.48 in the Dixie, that's a given. But, last week I thought that we could have some type of rally back towards 113.20 or so. So we'll see. Pretty one-sided trade. So if they can squeeze it here back over 1240, I still think you could get this 13 on the Dixie. And I've seen some counts where actually we could even retest 114 and still be bearish. So I'd be pretty careful buying the dollar up here, and perhaps there's a scalp. Keep an eye on the Dixie. The reason I'm trading the Dixie is because of all the tape bombs and cable, and not knowing trade selection's a little tougher. But talking about trade selection on between the pound and euro, euro pound. I know I've talked about this before, but look at the weekly here, Warriors. So I know it looked like it here. We had a breakdown under this 86.5, and there was no follow through. That was here. Okay. And here we are again, right back at knocking at the door of a breakdown. So we've had, let's call it 1, 2, 3, 4, 5, 6 weeks for bears to pile on euro pound to the short side, and I don't see him making a lot of progress. A lot of people said 84 was the given. That was a technical measurement. I think this time, if we close back above this breakdown at 86.5, there's something else going on for at least a move to 88 and maybe better. And I don't know if that's going to be because the dollar corrects or that there's more downside potential in cable. I kind of think it could be that, or it could be both. But anyway, not much progress on euro pound. It's a contrarian trade because no one wants to own the euro. But it's possible that cable is going to be an even worse performer going down the road and may make the euro look good compared to what's happening in the UK. So I know we have a little bit of a different schedule. Everyone can see my screen, right? Someone said they couldn't. Give me a Y if you could see my screen. I think more than one person.
I can see it, Coach. Morning.
Okay, thank you, buddy. How are you, Stel?
I'm very well, thank you. Very
good,
well.
buddy. I know Blake's busy. He's going to be on. He has a film crew. Blake,
I'm still here.
Oh, okay, buddy.
Yeah, I'm still here.
I thought you might be in the makeup chair.
No. It's,
okay. You don't need makeup anyway.
That's right. I'm naturally beautiful.
Tell me that. Call me Ed McMahon, Johnny.
No, I mean it's yes, I have a film crew coming here today. I'll be on Real Vision here in the next couple of days. I guess on Thursday is when they'll air. And so just getting ready for that this morning. But I'll be on with you guys today. So
ForexAnalytix making quite an impact on Real Vision.
Well, yeah, we're making a showing there, which is great. So if if you guys have access to Real Vision, it is a I think this particular tech trader will be sorry, I had to just retweet Greg's thing. What was I going to say? Oh, this particular tech trader I think is behind the paywall. I'm pretty sure, but it's not like you guys won't hear what I have to say anyway here. So, but if you get an opportunity to watch them, they have some really good content. Not necessarily just. Yeah, I mean, very, very well done, very professionally done. So
they've had I know Raul goes out and he's networked in because he used to be a real big hedgie, and so he brings in the really tremendous speakers with great minds, and we'll just call this a continuation of the trend, having initially Joe and then Steve and Greg and now you. So fantastic, man. I just before you go and you take over the screen. What do you think of this copper chart here, Blake? To me, it looks like just a corrective move. And, they say Dr. Copper has a PhD in economics. And to me, it looks like it could be a short setting up here, which doesn't really jive with the huge recovery we've had in indexes.
No, I agree. I actually I think copper is a decent short, and I don't trade copper actively, but looking at it, I would have to agree with you 100%. I mean, we're corrected to the what is that, the 618 retracement?
Yeah, big round number, $3.
Yeah, it looks like we're at the upper end of maybe a channel. So yeah, I don't I wouldn't feel too comfortable if I was long copper, seeing that U.S. equities continue to plow higher, and copper is continuing to struggle. Anybody who's long copper is probably thinking, oh man, if this does not start moving higher soon, I probably need to be out of this position soon. So
especially what really fired up the market, I heard after the fact, Blake, was the great economic news out of China on Sunday night, and they're one of the biggest consumers of copper. So if things are going that great, why aren't we at 330 right now?
Yeah, right.
That's what I ask myself.
No, that's a very logical question. I think if you're in the trade right now, you're probably wondering exactly that. So yeah, good luck. Now, hey, Coach, I know you've been pretty bullish the cryptocurrency space. Did you see what happened overnight?
No.
Oh, you of all people, you missed this? Take a look at
broke out.
Take a look at
oh my goodness, good.
That's Bitcoin. Look at Bitcoin. I mean, we rallied aggressively. Now, just so you guys know,
that's a lot of. Where is it? 4,800 or so.
On ForexAnalytix, we've had a bullish bias for Elliott Wave and basic technical for the last couple of weeks. We'd pressed.
Well, we'll have to cancel Marijuana Mondays and go back to covering.
We're gonna have to. So much for Marijuana Monday. So much for Marijuana Monday.
I saw something on TradeView. Someone set up a page called Marijuana Monday that has all the marijuana stocks on it.
Oh, I didn't know that.
Click that. When you click the.
No, I did. I did. I set that up, Marijuana Monday, just so I had a bunch of marijuana stocks there. That was for the April Fools yesterday, if you guys weren't listening. But just Bitcoin apparently squeezed. Now, there was from what I read, and the guys and gals in the chat room told me overnight, that there was an April Fool's joke that the CFTC had authorized some CFDs of Bitcoin to be traded, and Warren Buffett was buying Bitcoin. All these it was socially motivated apparently, but the fact of the matter is Bitcoin's actually holding. That's the thing that you should see, is it may have squeezed once it hit above 4,200, and we've been actually let's go into the analysis of ForexAnalytix just so you can read what we've been saying. Here, let's expand that out a little bit. 29th of March, Bitcoin is retesting the 4,100 area as resistance. A break above that will constitute a bullish breakout. The next upside resistance, 44.29. Bitcoin broke higher above the 618 retracement resistance, and a move above 42.10 level could spark further buying to the 44.30 level. And then this morning, obviously, we got that breakout, and we broke above 4,200, and we just squeezed. I mean, squeezed past 5,000. And the other thing to note is that Ethereum also broke higher, and you can see the Ethereum broke out of a triangle. Very big consolidation that we've been managing now pretty much all of 2019, and now we're breaking above the upper trend line, and a move above this 170 level could be quite bullish for Ethereum. So, for those of you guys trading the crypto space, like I said, we might have to just get rid of Marijuana Monday and go back to analyzing some crypto. We're getting some volatility here, and we're getting some moves. So that's good if you're long some cryptos. So now
GBTC, which you have at the bottom of the screen for people that don't know how to set up an account. You have an account set up, but for people that don't.
I have a Coinbase account, but I don't have any money in it. I've failed to open up an account because I'm like, do I really want to put any money in there? I've got money allocated in other places. I'm like,
It's hard to be everywhere, Blake.
It is, but we have built a nice base in Bitcoin. Again, I've talked about this quite a bit, and it's like, okay, do I really want to do I really want to be an investor in Bitcoin? Because that's what it would be. It'd be more of an investment versus a trade. And I've talked about putting some away for my kids just in case Bitcoin is the next best, greatest thing since sliced bread, which I don't necessarily believe it is, but you know, that's just regardless, we are moving, and we are, you know, on the move on Bitcoin. So it's worth noting today. And if we can sustain these gains above 4,200, which yes, we are at 47.87 right now, but if we can hold above 4,200 on a sustained basis for the next couple of days, yeah, hey, you know, maybe there's a chance we move back to 6,000. You know, is Bitcoin going back to 20,000 anytime in the near future? I don't think so, but you know, I may be wrong. No one, you know, I'm not here to argue that. I'm just here to tell you that we got a bullish breakout, technically.
Yeah, Grega was positive on it.
Yeah, Grega had his
caught Ethereum at the bottom, so it's not like our team has been ignoring it. I talked about GBTC, which if you don't have a Coinbase account, or BitMax, it's a trust GBTC in Bitcoin, and that's rallied about 25-30% from when I first started talking about it.
Yeah, I mean, you know, these cryptocurrencies, there are opportunities, and you know, and the good news is, you know, while the FX market's not doing anything, it's, you know, we are seeing some movement there. Now, speaking of, let's get into currencies. You know, I was talking to the guys from my office yesterday, and in Greenwich, Connecticut, and you know, these are guys that have been in the currency market for 30 plus years, and I'm like, you know, how many periods of low volatility like this have you seen? They're like, well, it happens, and then, you know, it can stretch on for months, but we'll come out of it. You know, the important thing is, and we were just talking strategy, is just being able to stay alive and not putting yourself in a bad situation. Because he was talking about the office and how all of our traders are doing. He's like, look, you know, everybody is just marking time right now. And it's, you know, he goes, I feel positive because we're not losing money. We're making money as a firm. It's just, you know, we're not making the kind of money we usually make because of the low volatility. However, this is the time where you can't get into a lot of trouble when you're trading, because it's hard to get out of trouble, because there's, you know, when there's no volatility, you know, you get yourself in a situation where you're down quite a bit and you take a big loss. How are you supposed to make it back when the market's just not moving? It's impossible. So you have to be very diligent about, you know, managing stops and managing risk at this period of time. So let's talk about the euro dollar. So the euro dollar is closing in on lows. I have a little bit of an issue with the euro as it stands, that, you know, the relative strength, as you can see, is divergent, but that doesn't mean that we can't break down. The euro is probably one of the most aggressive short positions in the market right now, and that, you know, comes with risk, a possible turnaround risk at any moment. So I think you have to be a little careful with euro shorts. Now, like I said, that doesn't mean that we can't break down. It's just, if we break down, I think downside might be somewhat limited. So, you know, a move down to 111 is logical to me. How much more can we get out of that? You know, how much more, you know, lemonade can we squeeze out of the lemon? I'm not too sure, but I look at a 111 level as possibly a bounce level. You know, if I had to draw, let me just kind of like give you an imagination of what I might think could happen here. You know, we could do something like this, you know, break down to 111, bounce back to 111.12, you know, or 112, excuse me, then, you know, making our way lower. I just don't think it's going to be a, you know, we're going straight down type of thing. I don't think, unless there's some sort of news that's driving the market. If you look at the cable again, you know, like a coach said, I'm not dealing with the cable either. It's you know, we challenged the underside of this trend line. We've come back down. We're at the 200-day moving average. We're closing in on the 200-day moving average. Lots of support here at 130. You can see all of this support that you know comes right through here. 130, just below 130. So you got to be a little bit careful. You know, I know all the Brexit votes were shot down yesterday, and that put some downside pressure on the cable in Asian trade last night. You can see in Asia we came down. Bounce was pretty minor, and then we just rolled right back over again. So the pound still looks pretty heavy. The Aussie came under pressure following the RBA, so we rallied to trendline resistance, triangle resistance. We slumped because, you know, after reading the RBA statement, you know, the fact of the matter is the RBA is going to probably cut rates. Excuse me, really quick.
You know, Blake, you know the market's pricing a 25 cut by September.
Yeah, and you know, so the next move is a cut, but I think most of the market really expected that too. This is not new news, right, Stelios?
Yeah, there was a tiny change in the wording where they said they were going to monitor developments, and that usually does not mean monitor in a hawkish way, at least not in the current environment.
Right.
But yes, you're right. The market was kind of expecting it, but that little change just brought a bit of pressure to the Aussie.
It did, and you know, I look at the dollar, and I think, well, you know, you're seeing the euro dollar's weak, the pound's weak. The Aussie just said, okay, well, it wasn't hawkish, so we turned the Aussie lower towards support. Now, we did find support at the 618. So I think if you're trading the Aussie dollar, you know, you have to be really careful being on the short side while you're above this 70.60, 70.50. And I think if we break below these lows, that opens a door for 70 cents. Now, you know, was it dovish enough to constitute a move below 70 cents? Maybe not at this point. I think we'd have to see some sort of risk aversion, but I don't even know what risk aversion is because we haven't seen it in so long in the market. You know, if you're wondering,
risk aversion is being short S&Ps,
or you know, just S&P, or you know,
no, I mean, but you should have risk aversion to do it.
Yeah, you know, yeah, we don't have.
I don't have
the stock market just continues to rally. So, you know, if the stock market came under pressure, that would help, you know, drive the Aussie dollar lower. But right now, we're just not seeing that. Excuse me, sorry, it's 5 in the morning here, so bear with me. The Kiwi dollar, the Kiwi is, matter of fact, we are at trend lows here, and the Kiwi dollar is actually in a pretty, I would say, pretty dangerous area, because if we start breaking below this 67.50, that could open the door for a lot lower levels. Now, when you talk about a central bank that has shifted to dovish, that is the RBNZ. So that came as a surprise to the market last week, and that's why you see this big red bar here. The market wasn't expecting the RBNZ to be as dovish as they were, and really saying that the next move is probably going to be a cut. So now you have the Australian dollar and the New Zealand dollar both moving together, but the New Zealand dollar could outpace the Australian dollar as expectations, interest rate expectations, have shifted more dovishly towards the RBNZ. The dollar Canadian has found a little bit of support after we had a double top here and it completed. So a lot of you guys are probably going, well, okay, Blake, you tweeted a chart saying the double top yesterday had completed. When a double top or a chart pattern in general completes, that usually tells me that whatever move was just happening is going to consolidate or reverse. So what I was trying to suggest with that tweet yesterday is that the dollar Canadian was going to find some support down here at 113, and it did. The bounce has been fairly minor. I actually played the dollar Canadian long right after I tweeted that yesterday, so we did get a little bit of a bounce, but it's been minor. And with crude oil as strong as it is, and by the way, I actually had to fill up my gas tank yesterday, and gas prices are on the rise, at least where I live. And if you look at crude,
they are nationally, bro.
Yeah, I'm assuming. So I was just saying they are in my neck of the woods. Crude is breaking out, and we broke through all this resistance. It looks like we're going to the mid 60s. We are at the 200-day moving average right now in crude, but we could very easily be trading up at $64 a barrel, which is going to find all this previous support all the way through here now. And frankly, it'd be close to completing an inverted head and shoulder pattern. We've had this, shoulder, shoulder, head. Let me get rid of that. That points us all the way up here. So crude looks like it still has some upside, and that's going to prohibit the dollar Canadian from bouncing too hard currently. All right, a couple other things that I want to go over. We have data coming out in just a few moments, and we have
Grega here.
The durable goods orders. What's up, Grega?
Hey, and we have Grega here, I said.
And we have Grega here. Yes, we do. So, Greg, I'm going to pass you over the charts in just a moment. Let me get through the data that we have. We have durable goods orders, and here I'm going to pull over my Bloomberg.
Hiya, Grega.
Hey, Dale. How are you?
Looking forward to talking to you, buddy.
Hey.
Hello,
Okay,
my favorite Croatian.
Let me actually get on a 5-minute chart here with the dollar yen. And by the way, really quick on the dollar yen. So you can see this trend line here that we have stalled at, and it was noted yesterday in ForexAnalytix. If you use ForexAnalytix, you go over to the basic technical analysis in the dollar yen 4-hour chart or hourly chart yesterday. It would be right here that we have this trend line resistance coming up here at 111.40, and we are just kind of knocking our head up against it. Now, the reason why that's important is because if the durable goods orders are stronger, we could actually break out and look to challenge 112. On a weak reading on durable goods, we might pull back a little bit. So actually, let me get rid of the 4-hour chart. Let me go back to a 5-minute chart just so we have this in front of us. As now, this is Bloomberg. If you guys are not familiar with what a Bloomberg system is, it's pricey. It's about $3,000 a month to have this system, but the news that news hits here before anywhere else. So if you see something on, like, let's say you're using a social media platform like Twitter and you see news, well, the person that tweeted it got it from probably Bloomberg or Reuters and then put it out. So if you're trying to react off of news that you saw on social media, you're way late to the game, because people like myself and other traders with these systems, we see them half a second to a second, 2 seconds before you do. So the numbers here that you're going to be looking for, that you can see the survey, this is the prior reading on durable goods minus transportations. These are going to be the really important numbers to watch right here. Just watch the actual and look for revisions too, which will pop up on this side if there's a revision that comes out. And then you can watch the reaction from the dollar yen, which is going to be most sensitive to the news once it breaks. So we have about a minute and a half. So Grega, thanks for being here today. Steve had some personal business he had to take care of, and I know everybody at home is always excited to see your Elliott wave work, because like me, like most people at home, Elliott waves to me is something that is not it's not second nature. So I love having Grega on our team. I get to leverage his knowledge, and that's one of the benefits of using ForexAnalytix. As you look at charts from whether it's Andre or Grega, you can see different types of analysis that may not be so familiar to you, but can help you understand the markets better. And so Grega, really appreciate you being here today.
Sure, thanks.
Awesome. Well,
I know that a lot of traders who love the Elliott waves have to spend a lot of hours actually to sit in front of a computer to level all of those charts, and can be quite demanding. So definitely, that's why I'm here. I'd love to help and share the charts.
For sure,
You know
appreciate it.
No matter the method, if you're lazy, you're going to pay the market.
Yes, that's true, definitely.
You know,
Okay,
so it takes a lot of hard work.
Expected durable good. You can see the dollar yen just popped up just a little bit. Let's see the revisions. The revisions came in a little worse. So the dollar yen's getting a little bit of a bid, probably from this the durable goods orders just coming a little bit better. But you can see that revision was lower, so I wouldn't expect a big reaction here, and we're not getting any type of, like, you know, if I saw a blowout number like negative 1%, and then you know, minus transportation's like at 0.2%, I would have been more apt about trying to buy the dollar yen, even without any revisions. But it's unfortunately not going to give us much of anything to do, which is a bummer in this environment. We are seeing a little bit of a bounce in the pound, or excuse me, in the euro, getting a little bit of a lift there. But you know, and by the way, we might have a little falling or descending wedge that, you know, if we can hold here, let's just. I'm just going to give you like a just in case, you know, maybe one of those types of scenarios. In the event that we get a move above like 112.20, you know, we might see a little bit of a squeeze, and then people might look at the euro dollar as being more of a double bottom. So we'll see. It's a lot has to happen in order for this to take hold. So Grega, now this is where Elliott waves, in my opinion, become very valuable, because you have counts that you'll see, you know, in the market that could really suggest that there is going to be an inflection or turning point in the market. And so, you know, I'm interested to see what you have. So I'm going to pass the charts over to you, if you don't mind, and sure. They are coming your way. There you go.
Okay, so we really have to talk about the euro dollar, huh?
I guess you do.
I mean, yes, I mean, it's still a very big range since 2018 lows, but what I see is that despite lower price action, we still see very too much of overlaps, nothing really impulsively to the downside in the last couple of months. So I really would not be surprised if we will somehow try to hold this support down there at, let's say, 100 pips lower or so. So in my opinion, I still think that we will see a higher degree correction or reversal, if you want, up into this wave B before market may resume with this downtrend actually that is in place already, as you know, for the last 10.
So that kind of goes with what I was talking about with you know, perhaps in the euro a move down to 111, which is the 127% extension of this last move higher. Might take us down to 111, and we might see a bounce there. So that really coincides with what you're saying.
Yes, I would definitely keep an eye on this trend line of this wedge. I mean, as you said, these are also interesting levels. If you take a look back to June of 2000 or May of 2017, so actually we are in this area now once again. So I would not be surprised if we at least try to limit the losses here and turn to the upside for some euro rally. But before we may look for a bounce, I think that current decline should complete in 5 waves. There's still ongoing 5-wave fall within this current wave C. So this was wave 1, wave 2, extended to wave 3, as we can see here on the hourly chart, expecting wave 4 and then more weakness. So if we see an intraday bounce, let's say through the US trading hours, I would definitely keep an eye on this first resistance at 1248, and then watch out for potential new turn to the downside. If not today, maybe tomorrow. So the idea is that because of very deep pullback, I don't think this is a correction, which I thought last week, and even a week back we will actually continue higher. But since market is just keep pushing lower, and also it made with the current new low this 5 wave within this extended wave 3, that's why I think it better fits to the current bearish structure than any bullish developments. So in my opinion, until we see 5 waves to the downside, euro is not a buy, definitely not, because I think it's just too soon. From a trading perspective, what would be interesting if we see a new low, a completion of these 5 waves down as well, and then make a very nice strong bounce, then I would probably look for a pullbacks to join the uptrend, if of course this lower wedge trend line will hold.
Okay, Blake, I've got it.
Gregor.
No, he was. I was just saying, I'm going to be checking out. I've got to get ready for the filming today.
Yeah, sure.
Hey, Grega, thank you so much for being here. And I know Dale and Stelios was going to be with you up until the interview. So thanks, guys.
Okay, good luck today, Blake.
Thanks, Blake.
Grega, you made a couple of great calls. I want to, tip my hat to it. Last week I asked you about crude. You said crude could go to 62. We've achieved that target level. What's your view from here?
On crude?
Yeah, nice call for 62. That's what you said last week.
Yes, and I was like, when Blake had this presentation right now, I just put this another wave count here for crude oil, which actually shows room even for 63. As you know, I don't like to be too smart and just paying attention to one wave count, because I definitely have to respect what the market is doing. At the moment, it was a quite strong move to the upside. Okay, so yeah. I would not be surprised if this current recovery will just continue, especially if stocks will continue to improve. So that's why I also put this count together, which is actually like a double zigzag. So you have here extended wave A, wave B pullback, and then wave C. Okay, then you have another 3-wave pullback, which can be wave X. So this was actually the first part of a correction, and then you have the second part of a correction, and wave X is just a middle wave that connects both corrections. So we are now tracking second correction, which can also unfold as an ABC, as we can see. And what is interesting, that in ABC corrections, okay, you will see wave C can be similar in distance compared to wave A, and this comes in around 63.60 or 63.50, around there. Okay, but what's also very nice to know is that there's similarity between those corrections, complex corrections as well. So what I see here is that actually there is also another fib level that is interesting around 60.40, okay, which is actually wave A measured from this swing low of a wave B. So I think that this is quite significant, this area up there. And also, if we take a look at these fibs, which are on the first count, but still fibs are important, are also some important levels around 64 to 65. So I would not be surprised if current momentum will just try to push prices even higher before market turns to the downside. But in both cases, I think that there will be maybe April, the month where we can expect a reversal, or maybe even early formations, but in the second part of this month. Okay, so definitely we should be on the watch list that sooner or later crude oil rally will come to an end.
Okay, let me ask you this. Why do you, I know wave work is not about time, but you bring up time and time again, Grega. So you're talking about the second half of April. What is the tool that you use to measure time, or is it just from watching Elliott patterns for so long, you just kind of have a feel for how long it may take to complete?
Yes, I mean, I also use fibs for time as well. I just don't have it here. And so, I mean, it's even more significant when you have, let's say, fib in times. I will present this in another webinar, when you have everything come together. fibs in time or extension of time based on fibs, and then you have extension in price based on fibs, and everything comes into the same zone. So
that'd be a great presentation, Grega. So, you know, I mean, what a, I think, you know, I know you're not a Gannis, but, you know, he thought time was more important than price. And what you're doing is both. Price is important and time is important. So I really would love to see how you project into time. So I'm glad I asked that question.
I will definitely I will definitely prepare such chart.
Okay, so you were talking about yields also over the last several weeks, buddy, and we're looking for yields to start heading back up. We had a little 3 drive in the 10-year, and we had a big update in yields yesterday. Is this the beginning, or is this just a 4 and there's one more drop in yields to come?
I have here notes, okay, and you can see that we made probably 5 waves to the upside for wave 1. And what is also interesting is that I was looking at these fibs up there, and we turned nicely to the downside. So this is quite significant for me, because it was confirmation from the market that these fib levels actually helped the price up there. They limited the bulls. So I will never say, okay, market will stop right there. I will rather say, okay, I'm waiting and paying attention to those fibs, and if we'll see a reversal away from there, then we may start saying that, okay, market is turning, because those fib levels or this cluster was respected. So because market reversed nicely to the downside from there, I'm thinking that we are already stepping to this 3-wave setback. So at the same time, as you know, yields will go up. If that would be the case, stocks could actually remain supported, and I would look or pay attention to yen crosses, which already are showing some of them some very interesting patterns. So in this risk-on environment, I would be looking for ASEAN. Now ASEAN is in a consolidation, it's in a triangle. So I'm waiting on this wave E to unfold, and maybe we will come down back to 78, and then watch out for a rally. And if this 78 would hold and we get a bounce, I would be looking for potential longs. Also, I'm looking at CAD-yen as well. CAD-yen already made clear 3 waves to the downside, as you can see. This wave C was equal to a little bit lower at 81.30, but we came very close to this area of support, and since market bounced and moved above this trend line of a corrective channel, I just think that we may continue even higher. So my attention here will be in a wave 4 in context with this, or everything is in context with this 10-year US notes. If we'll continue to move lower for wave A, then of course CAD-yen and ASEAN will be on my radar screen. Also,
I'm getting a question from Euro Yen before you go to the yen from Ayaz. Maybe you could just cover that briefly, please.
Yes, Euro Yen is a little bit more complex. I mean, Euro in general is very weak. If you look at the Euro crosses, you will see actually what is going on. So rather than looking at the Euro Yen for potential long ideas based on risk on movement, I mean, I would rather pick some commodity currencies, because commodity currencies are currently doing much better than the euro. So, but technically speaking, I mean, still you had this 3-wave fall for March highs, but so far this recovery is not really that strong. You were able to see on CAD-yen it was much stronger bounce. So we are on CAD-yen, we are already trading above this trend line, right?
Yeah.
So in my opinion, I mean, Euro yen could, of course, also move to the upside. In yen in general will stay weak, but you may have much better opportunities on other commodity pairs against Japanese yen, I think. But watch out for this 125 level. If we will close above it on a daily basis, then maybe this can still be the beginning of something that will take us higher.
Okay, so you were going to the yen, and I remember we talked about one more plunge in the yen that ended up manifesting, and that was it. And we've been off to the races from that 109.60 level.
Yes.
We're on the verge of a major breakout here, buddy.
Yes, I mean, and we are also, Blake posted some chart there or tweet on Twitter, and I said that not only 110 is interesting round figure, it's also important, also important to me because of two things. First, it was a gap that occurred on January 2nd when the market opened after holidays. So obviously this gap was firstly respected right there when market came back to the downside. It was filled. And then we broke higher after this pullback. So obviously this same level should be somehow important, if not respected. And as you can see, we have seen a very nice three-wave drop back into this area. So only from that perspective, gap perspective, okay, and also from an Elliott wave perspective, it was everything came together right there at 110 area, because I was looking also for an ABC drop against the previous 5-wave rise. And this gap, this level was some kind of another confirmation why really we may look for a bounce right from that area. And so far we are recovering very nicely. We are still testing this trend line, but if this trend line gives way, then I think that this may actually cause even more upside on other yen crosses as well. Of course, it depends how the 10-year US notes will continue to the downside in impulsive fashion or not.
Okay, because someone also asked Tharun about, can you elaborate a bit on the US bond chart that you had tweeted, but we just covered them, right?
Yes.
Okay, so Ayaz says thank you for Euro Yen. What's next, my friend?
What's next?
Yes.
Let me check. Well,
before I bring you to Bitcoin, which you've been constructive about. Okay.
Everyone are talking about Bitcoin. I mean, okay, we will go to the Bitcoin later. I will take a look on gold.
Okay.
As you know, we all actually at ForexAnalytix were bearish on gold, right?
Yeah.
Everyone expected this reversal to the downside. I mean, Joe talked about it, Steve talked about it. I made the Elliott wave analysis. So this is what it's all about, right?
Yeah, confluence of different methods saying the same thing.
Yes, and also if you remember, we discussed as well that no matter what is the big picture of gold, in both cases, bearish or bullish scenario for the next few months, in both cases we expected, they're expecting a pullback. So my primary wave count based on overall dollar picture is still that actually this could be already completed triangle and that we will continue lower. Of course, you have to see 5 waves of decline. But even if we
haven't seen 5 waves, right?
Of course not. Not even 3 waves yet.
Okay.
So, and even if I say that we are going to the upside, that we are going higher, even here, we still need wave E to complete this wave B triangle. And wave E is also corrective leg, should be made by 3 legs or even more. So it means more weakness, because on the 4-hour chart, okay, this was the first leg of that pullback. Let's say that we are focusing on a bullish count and we are in a wave E. This was the first leg of a pullback, this was wave bounce. Now we are in a third leg of decline. And this should take prices below this wave A. Maybe wave 1 if we are at the start of a new bearish case for gold. So in both cases, I think there is room for 1260, 1270. Also, there's interesting trend line that comes right there in this zone connected from 2018 lows.
Where does it come in? Around 12.5, Grega?
Yes, 1255, around there, yes.
Okay, thank you, bro.
There's also very important trend line, of course. If this trend line will hold, notice that actually the price decline will stop exactly at the wave C compared to the wave A equality level. So again, if we will get a bounce here, then of course bullish scenarios will have to be considered. But if we'll start falling very aggressively to the downside, then we have to be prepared on something much worse here for gold. So bottom line, we still don't know where we are standing in gold. Are we actually in start of a new big bearish trend, okay, or we are still in the middle of this correction that is underway from 2015 lows? But in
either
both
way,
cases,
yeah. So either way, no buy yet. It would be very premature.
of course not. I think there's more weakness, possible weakness from here. And same thing on silver. I'm not sure if just Stelios is listening. Because
plug your ears.
I'm making a voodoo doll of you.
You're a voodoo child.
There is some interesting area that could limit the weakness on silver around 1450 up to 1470. So we'll see what happens there, because at the same time that would also make 5-way fall from that 1560 highs. So
hey, Greg, do you look at the gold-silver ratio chart in Elliott wave terms at all?
Yes, I'm looking, but I must admit,
I know Steve looks at it a lot. I was just wondering if you had any. Because I thought there was a chance we might be putting in a right shoulder, or we're going to new highs in that gold-silver ratio.
I'm not sure if I have it here.
Okay.
Maybe I have it here under gold. I know that is no, I don't have it here.
Okay.
I have gold
Next
versus
time.
oil, euro, S&P, but don't have the gold silver. But that definitely it's a very good indicator to see, or to spot which market could move more. Obviously.
Okay. All right.
Okay.
So next time when we talk about time, maybe you could have that.
Yes. Yes.
Great to see.
Sure.
Okay.
I will put this on my list definitely. Okay. So now we cover Bitcoin. Are we ready?
Yeah. I'm coming out of the crypt. You know, I'm old, right? So I'm looking at crypts. Well, not yet, man. I beat the Reaper almost 5 years ago. So, okay, buddy. So, yeah, you were looking, I think you said 4,700, and I've interviewed some people that, you know, said that 4,700 was a possible, you know, initial target for if we came out of here. No one expected it to happen in one day, but go ahead.
Yes, I mean, I'm looking, as you know, some brokers stopped offering futures or stopped with trading futures contract, right?
Yeah, and so you can't, they couldn't short it.
Yeah, so everyone thought, okay, a new uptrend is here, right? But what is my concern is that, you know, I'm sure that there are not enough people who were able to grab a bottom here. So now when they see this, everyone will try to get involved. But in my opinion, when everyone expects something, well, it's probably not going to happen. So I would not, I mean, this is not 2017 when you had just a straight move to the upside. There's still, if you ignore your own opinion, I mean, it's still a downtrend. So saying that we are now in a new very mania cycle, I just think that this is not it. Okay. So in my opinion, I really would be careful in the next few days. 5,000 is also a very strong psychological level, but of course there is room for slightly more upside from here. If I just focus on this price action from February lows, okay, this could be wave 1, wave 2, very strong move that we have seen right into these fips can be wave 3, and now we are making a pullback for a wave 4, so then another retest of these highs. And after that, I would be very, very careful. Also, why I would be careful around this 5,000 level is because I have this alternate count. Notice that this is actually wave A and can be a triangle in the middle, and now we are actually making a wave C. Okay, and this count really scares me because, as I said, a lot of traders, investors will now try to get involved here. Right. And actually, maybe this can just cause a temporary new leg to the upside, but then market may slow down actually. And do what is least
This
expected.
count scares you because it portends new lows, taking out the January low.
Yes, and
Okay.
I mean, let's take a look at some cycle analysis. This is Bitcoin futures.
Hey, Stell, are you here? Still here? Okay.
No, he's not trading Bitcoin.
Okay. Oh. Well,
Okay, so here's just my simple basic perspective. Okay,
yeah.
you have first very strong move to the upside for 2017. Then you had a very strong deep decline in the last year.
Right.
Now, what are the odds? What are the possibilities that the next move again will be very strong? So you have 2017 very strong, you have 2018 very strong cycle. What are the possibilities that another strong cycle will be now in 2019, and this would be to the upside? If you look at any market, there is, I mean, you won't find such kind of personality. I mean, look at the gold, for example. You have seen a very strong move to the downside, to the upside into 2011, 2012. Then you have seen very sharp reversal over, then markets went sideways. So in my opinion, I think that this is just a short-lived recovery, and that this market will actually stay sideways for the next few months, even weeks. I mean, we definitely could see 6,000, maybe even 7,000, but as I said, this is not 2017. So I really don't believe that we are in
so it's not an investment, it's a trade.
Yes, exactly.
Okay. All right, buddy. Great.
Yes.
Go ahead. No, go ahead.
No, it's okay.
All right. Antonia would like to know, if you have time, and we do have time, maybe you could give us your count in the Dow.
Yes.
Or palladium, which I don't think you covered, so we'll go with Dow. Steve's a palladium guy.
I have palladium.
Okay.
I just have to find everything because I have so much left. So you said Dow, right?
Dow, yeah.
I'm not sure when this was the last cover.
Or you could do any index. Probably, it's pretty much the same. S&P's, Dow, just a matter of relative strength.
No, I made a triangle on Dow, so I'm not sure if I have it here under this layout. Probably not. Okay, I'll find it. So the Dow I know is in a triangle. Okay, yeah. And will probably continue to the upside. If no, it's already at a new high.
Yeah.
Yes. Okay. So if I make just one quick wave count here, this could be wave 1, wave 2. This could be wave 1, wave 2, wave 1, 3. Maybe
4 triangle, and we're in 5 now. Okay.
Yes. So what I really like about this one is, if I have a triangle here real quick, is that actually this was Sunday gap, right? I would watch out for prices to come back down to fill this gap and then move to the upside.
Okay.
That would actually be very nice. And what would probably be even better in this situation is that we said that ASEAN could come down into this wave E, right? For triangle.
Right.
So at the same time, okay, and this in blue is ASEAN, okay, and we have a triangle there as well. So what I would be watching for is this gap to be filled on stocks. We have also gaps on other indexes as well. Watch this trend line support as well. So if you see pullback here, at the same time watch ASEAN to make wave E, and then I would be looking for a bounce.
Okay.
I mean, this could, based on intermarket analysis, this is actually, I really like these developments. I really like this gap. As you know, firstly, gaps are open, then trying to act like a magnets. Once they are filled, new orders that are unfilled in this area are executed, and of course, market can again change the flows, and that's why I see our move away from the gap that was filled.
Okay, great presentation, buddy.
Yeah, thank you.
Yeah, and appreciate you being in here. I'm gonna look for a tweet because to me this is an interview. It's not just, you know, so I'm gonna put it out there and appreciate every time you're here, Grega, the clarity that you bring to our community and edifying everyone who hears you live and then watches the video later. You're, I'm a fan.
Thank you. Thank you very much. I appreciate that.
Okay, buddy. So everyone, that's Grega. And, you know, be great for you to have his input every day, which you have as a subscriber. So join us and you could know what Greg is thinking and everything. As you can see, covers multiple instruments, and you'll have access to his views every day with us. So good hunting the rest of the week, my trading warrior brother.
Yeah, I will do my best.
Okay, buddy. Thank you, Grega Horvat. And you can follow Grega at Grega Horvat on Twitter. And Barack, I see you in the house. I'm looking forward to talking to you. I'm going to give you the controls. You're going to be able to control our television set here. Want to welcome you back to Face. We're with Barack at Trading Channels coming up right now. So there it is.
Hello.
Hi, Barack. Welcome back to Face, my friend.
How are you?
I'm doing okay. So a lot of action since you and I talked. How many months ago was it, my friend?
Probably over a year ago.
Oh, okay. So you're overdue.
Yes.
All right. So we covered your story. So yeah, a lot of people do a lot of channel work, and you know, I have a saying. It's probably too skeptical that Trendline's destiny is to be broken. Do you believe that?
Absolutely, yes.
Okay, why? Because look how long this channel has worked. So, you know, so eventually they'll be broken. But interesting line you have here, because I don't know, there's just so much bearishness right now in the euro, and you're showing a pretty important, significant support level right here. Am I reading it correctly?
That's very correct. So the visualness of the chart, I guess, doesn't need much explanation. We are at a very important inflection point, in my view. The reason is obviously the downtrend, the red one, is huge. So in the long term, when this channel breaks to the upside, and I expect it to break to the upside, I would be turning quite bullish. But for now, as long as this particular channel is in control, I would be, I mean, we basically turned right here, again, bearish. As you can see, this nice, the underside, the back test of this nice broken support was pretty good. And there was one small channel here, and that one was broken down. So it was a confirmation of that top. And now we have formed this blue channel that is pointing further down.
What's the time frame? This is the weekly chart.
This is weekly. Yeah.
Okay. All right.
This is weekly, but this is log scale. So I just want to particularly emphasize that I mostly on all of my long-term charts I use log scale. Very important for the commodities. It may make not much difference on Forex, because Forex doesn't make a lot of multiples of moves in multiple powers. It doesn't go from 2 to 6 or 10. So it matters when the prices go up and down in multiples. But I still see value even in Forex. So this is a log scale chart.
Okay. Let me ask you, can I ask you about how you came up with the midpoint line? To me, it kind of resembles pitchfork, but I know you're not using Andrew's pitchfork, are you? How did you come up with that line? Since if you look to the left, it goes through a lot of price action, but becomes very relevant right here.
Exactly. So, very good question. When I'm finding these internal supports and resistances, I don't follow a specific percentage or a midline, but I hover this line to find out if there is any precedence and if the prices have reacted on those lines, just like the outer boundaries of the channels.
Okay.
I would call it walls, and these are the corridors
like
of the channels. And that's
great metaphor. It's a house.
Yeah,
you have walls,
it's kind of, that's
you have
the metaphor.
corridors, and where's the master bedroom?
That's right. The master bedroom, where we are at now.
We're kind of like, we're either holding here or we're going to the basement. So,
exactly.
All right. So, actually, just looking at the euro, if we don't hold here, then your blue channel line comes into play next down at the bottom. Is that the next important
That's right.
line?
Yes.
And
if this green...
Go ahead. Go ahead, buddy.
If this green diagonal resists support, so you can see it's quite accurate. So it has some precedence all the way from 2012.
Okay.
And
look at all those hits. Yeah.
And then it was back tested. If you count this one as well, maybe it got closer, but 1, 2, 3, 4, maybe 4 touches lately in 2018 and 19. So it's kind of when you have a support or resistance that's being forced and bashed quite a few times, it makes it weaker. And the more hit you get, it's like the more power it will have once it's broken. That's how I see it, as like a living, as like a dam's wall. Once it's cracked, or it holds a lot of water behind it, and that's like stops below. Obviously, once the long stops get hit, the downward move would be quicker. And I believe if this green support breaks together with the red internal one that has, you can see 1, 2, 3, 4 as well. So that's some like really important inflection point here. And I think 1.1150, 1.1150 is where we can be sure that it's breaking to the downside. And here is a big gap, which is the Macron presidential.
Exactly. That's what I was looking for eventually, long term. And I'm looking for a bounce interim first, at least some type of bear market rally, maybe even back to 114-ish. It's a possibility, but that number that you have again is the Macron
107, I think. The gap.
105.80, I think, is the gap there, Brock.
Yeah. Let me see. I see it as 107.20 or something. But it depends on every broker.
Platform?
I saw many different gaps on different platforms, but the idea is this gap may get filled.
Okay, so 111.50 is a very important line in the sand in the euro for you, and under that, acceleration to the downside.
Yeah, 111, maybe a little. Yeah, 111.50 would do it, I think. Yes.
Okay. All right. What else is on the radar?
Okay, let's go to. Let's see.
Okay, that's interesting to me.
This is oil.
Crude. Yeah.
Crude oil, West Intermediate, WTI. Yeah.
I like. You know what? I really love your technical work. It's excellent.
Thank you.
I mean, these pictures that I might see something similar, but you're really clean and crisp formation looks and interesting channels. That it's kind of an art, isn't it? To the longer you've been doing this, you start to see things and you experiment and draw a line, erase a line, and seeing over time you can see these things that, say, for example, someone who's been trading for a couple of years would not see.
Thank you. Because of the rules that I follow to form the channels, is basically like now they're all ingrained in my DNA. So I kind of see them before even I draw them.
I know what you mean.
For very, very simple, like a very basic example, is the bottom out of oil. Maybe that can show how my brain works with my analysis. So when back in December of 2000, what was that? December 2019, right? So this is
the end of the
low.
year. So you had that red line drawn before it got there?
Yes.
Based on a parallel from the top?
It was I drew both of them. So the blue one, I was ready for that inflection point. Before the bounce, I don't say that there's a channel, because you need two touches minimum on both sides to call it a channel. That's the main rule. And you get the second touch on the blue is here. Yeah. And then you also get the second touch on the bottom band on the red one, right there.
Where was the first touch? Where was the first touch? All the way back.
The first touch was You mean on the red one?
Yeah, the bottom red one. Look how far back it goes. Yeah. Okay, so you're going back to 2016.
Yeah, this is 8 hours.
See, I never would have thought. The only way I would have been able to do it is I believed in the top line you had up there, and then drawn some type of parallel line to that channel. Right. I don't think I would have looked back to 2016.
Yeah, I'm looking. Yeah, nice. I was looking for a bear flag formation. This is a huge bear flag in the making, but I can't. We can't confirm it until it breaks.
Okay.
But
this is a great learning because it's live. Yeah. Okay, so I had a line at 61 coming in yesterday, kind of a broadening top line, and you have a wedge. And, I trade wedges, and the upper line of a rising wedge is a return line. The thing that, I've been waiting for this line in crude at 61. What happened yesterday is what I call a throwover, where it accelerates through a wedge line. Have you found that to be also the case, that and then once it accelerates through a line, you just wait for it to get back within that channel for it to be a signal?
The break of a rising wedge is very tricky.
If we accelerate over this and went to 63, would you wait for it to come back
to back test?
No, comes back inside of it.
Inside of it is that's why I say it gets very tricky. Sometimes it's it kind of fakes it, fakes the breakout, so it goes up and then comes down right back in. As you said, it's a throw over. So that's where I get a little bit too like cautious. But on this particular one, it has tried so many times. You can see 1, 2, 3, 4, 5, 6, 7, 8, maybe 10 attempts on this green resistance.
Yeah.
And it's still holding. And I'm inclined more to the upside. If it breaks, it's not going to be a fake. Because of so many touches that it has. I'm guessing there's going to be a lot of stops here. Of course, short stops, and they will all be taken out. And obviously, I'm looking also on the indices. They are looking really strong. Everything at the moment looks fine. So it's logical to me that oil can go to 65, 70 band.
Okay. All right. So the line has contained it. I don't really see the stop argument, because I think that most of the bears have been trying to top pick it, because I know I've been doing it.
Right.
Probably have thrown in the towel. So we're looking at crude. Nice look there with a wedge. And you brought up indexes. What's that look like with your channels?
So this is
NASDAQ?
FTSE. No,
okay.
this is a UK index.
Okay.
Well, I can go very quickly because I know it's not very interesting to many people. But the breakout of the orange channel, which was a very textbook channel, this golden one, was obviously screaming buy. And then it formed the red channel, which was really a perfect touch on its bottom band. And the third one. And this here is a standalone broken resistance where it held at its back test. And from there, it didn't look back, obviously, and it just made a new high. And maybe we may get a little bit of a stop over here. Maybe a pullback if it holds. From my point of view, I mean, when you have a standalone support or resistance, 2 touches is not enough. It has to have 3 touches to confirm it. To a line through 2 tops or 2 bottoms is just a line. That's according to my rules. I mean, people can have different rules, but for me, if it touches here and then reverses, then it is a resistance. Until then, it is just a line through 2 tops. And that's where I would maybe expect maybe a reversal and then the breakout at the forward, just like the rising resistance on oil, may open for more price, for more rally. This is S&P. Yes. Let me see. So this is the weekly. This low was the back test of this broken resistance, rising resistance.
And you have that line drawn before the crash that we had in December.
That's right. Yeah.
Wow. So you have some 2 great lines: a crude line that tipped you off towards longs, and this S&P line.
Yeah,
that's all you needed to make your year.
Together. Yes, it all came all in, all together. When it falls all together and it shows you an inflection point where everything points upwards or downwards, then you get a good year.
Yeah,
if you catch something like that.
Okay.
On the shorter term. We're
approaching some resistance here.
Yes, it actually cleared one of the resistance with this new high.
Yeah.
So I'm looking at the orange one. So these orange ones are the level resistance and support. So 1, 2, 3, 4, 5 touches, and the 6th one broke it, back tested twice, and it also found. Just a second. I like a little bit more accuracy. So let me do it like this. So you can see the green support. I was looking into this and saying if it touches and bounces, it becomes a support. Before that, it's just a line. It's just one channel potential. But the moment it touches and bounces, it becomes a support. And that's where it did. It's like a double support. And now it's heading towards, so because it cleared now this orange resistance as well, it may be heading towards the blue resistance, which has 3 touches. And breakout may be opening for the orange top band above 2,900, maybe 2,940 or something.
Yeah, that was Okay. Any views on the precious metals that have been under pressure?
Yeah.
Oh, what were you going to? You just, I don't want to call.
No. I can go ahead. This is the Russell 2000.
Yeah. Does it mean anything to you that the Russell's underperforming the rest of the indexes?
It was overperforming at some point,
right?
And it was making new highs where the others were not. So I'm not too worried.
It also peaked earlier last year before the big decline.
That's right. So it may be sometimes a leader, sometimes a laggard, but for now it is lagging. Yes, you can see it's not making new highs. But I'm actually fairly bullish. I'm myself is long because I saw this blue channel when it touched this here on the blue bottom band. It was a potential channel until then. But the moment it bounced, it kind of confirmed this as a channel, and which was also like a double support because of the red one. And that's where, you know, I said, okay, let's go ahead and buy it. And now the orange resistance is holding, and the more important one is the red one, which has already 4 touches. And I believe it's gonna eventually go ahead and take out 1,600 level and reach a new high as well. If it doesn't, you know, because of the entrance here, that's what the channels is good for, because it's visible, it's visual. It doesn't leave much kind of like a speculation. It's my support is here, and if it's broken, I would short it. So I would reverse the trade and short it, and till then, the way's up.
Do you, when you reverse out of a position, do you do it at the same time, or do you liquidate a long or short first and then initiate a position? Do you use like reverse out stops?
No.
Okay.
No, I don't, because the moment this one breaks down, I may not be able to get in a good price. I may want to wait for a back test of that blue. So I'm a discretionary trader, so I'm and also the breakdown level is never known to me, because we never know when and how fast it can come here to break it. And that's why I would have to watch this. At the moment, my stops would be here, obviously, but in case it breaks, but I would have to watch this. If it breaks, where to enter the short to judge that move.
Okay.
Yeah.
Great view.
You asked for the precious metals. I've been quite a bearish person on the analysis that this red mega channel from 2011 highs. This is also again a log scale. You wouldn't see it on a normal scale. And this black resistance that has been quite accurate. And they both held. And I was also looking at the same thing on obviously the silver. Silver, sorry, this is not the one. This is a single one. So silver's big channel is here. Same channel. Yeah?
Okay. Where do your where do your return lines come in on both gold, your macro gold and your macro silver? I'm curious. Since it's is that going to be around $800? The red line, say, into 2020?
Gold may fall all the way to 1,000 to this black bottom band. That would be a major support if it gets there. Not support, but potential support. Obviously, it has only one touch here. Yeah. So it can bounce here.
So I'm curious where the red line would come in if it broke that 1,000. Just, you know, I know.
Yeah, a lot.
Come on, give it to me.
Yeah. 880. Yes, it's about 800s. Yes.
Okay, you know what? You know what else is significant about 880 in gold?
Mm-hmm. What is that? No, I don't.
I'll tell you for $99 a month. No, I'm just kidding. Anyway, Barack, that was a high in January 1980, the last cycle bull market when Russia invaded Afghanistan. The high was 880, and you know, sometimes as markets have long memories, longer than elephants, longer than us,
absolutely,
they'll come all the way back. So if you look at that, go all the way back to 1979, 1980. That's when gold went from like $50 when they made it legal, $200. They made it legal, and 75 for people to own gold again in the U.S. And it went from 200 to 100, and then up to 880, and that was during the Hunt silver squeeze. Anyway, a little history lesson from the professor. And that's why I wanted to see your bottom line. I just had a vibe that it might come in down there. So,
yes,
great coverage.
This is a shorter term outlook. The blue channel.
I have a problem. I do a lot of Nostra Pinkert stuff. Just because it's interesting, not because you can trade.
Yes, thank you.
So, all right. So, your gold short term, you have support at this 1280 level.
This is 8 hourly. So the moment it bounced off this blue channel's bottom side, it kind of confirmed it as a channel, and it formed like a green wedge, and it came down, and now it's broken, and the backtest had happened just in the last 2 days. And to me, it looks very, very bearish for the next few days, weeks, it could, whatever you call it. But for the moment, I'm short, and I'll keep it short. Same thing happened in a much better way on silver. 1 second, please.
Okay, show me your bottom red line in silver too. Your longer term macro.
I will do that.
All right.
So this one here.
$8.
This is this again small shorter time frame.
Right.
The red channel was again a bear flag, and the blue one was a textbook declining channel, and it's still holding. The back test you can see on the red, so it had 3 touches on the bottom, and now the back test happened, and now there is some level support here, the green one. And if it gets cleared, then we will be heading towards the blue bottom band.
Is that around 1430? Is that around 1430? That bottom blue line?
I think
that's a target I have.
Yeah, 1440.
Okay.
Depends on how fast it gets there.
Yeah, close enough for government work.
Yeah.
Okay.
So, and you asked for the bottom line of the red. To be honest, the third touch on a channel obviously doesn't have to happen. It's already a channel with 2 touches on both sides. I never say, oh, it's gonna get tested for the 3rd time, but if it does, then it would be $6, $7. You know, it's very low, very, very low. If it eventually breaks,
we'd be in a depression then.
Yes. I mean, if it gets broken to the upside, obviously we will turn bullish and we'll buy it. But for the moment, the price action dictates lower prices.
Do you follow gold silver ratio to know which one's leading and which one's lagging? And I also have a question from Forex Gal, and it's a great time to do this. She's asking Barak if you have a website.
Trading channels, tradingchannels.uk.
You can show it.
Yeah, let me show it.
And that is also Barak's handle at Trading Channels. And there's his website. You know what? You have a great demeanor. Your EKG would not have erratic lines on it. And that's the kind of personality you need to be an effective trader, is just to stay calm and when everything about you is in flux. And I'm so glad I invited you back.
Thank you. Thanks for having me, Dale. Very kind of you.
Yeah, well, you know what? Thank you for being here, Barak, to edify our community and give us some great views and looks, both short term and long term. So we're going to do this again down the road. And thank you, Barak, my trading warrior brother, for being with us on Turnaround Tuesday and our anniversary week. This is our 2-year anniversary week. So thank you for helping us celebrate it with excellent work.
Thank you. Thank you very much, Dale. Bye.
You're very welcome. Okay, everyone, that's a wrap. Claudia, I will invite him again. I read your mind. Jinx, you owe me a Coke. And remember, don't just count your pips, count your blessings. See everyone tomorrow. Good hunting the rest of the day. And thank you again, Barak. And
thank you very much.
And I'll see everyone tomorrow. Thank you for your attention. Adios.